Welcome to the AmTrust title webinar on the office market today. My name is Michael Stoller, the host of the Stoller Report. I have six very interesting individuals, a couple of owners, and a couple of prominent brokers today on the webinar. My guests include Bill Elder, Senior Executive Vice President at RXR Realty on the owner side. Eric Gural, Principal at GFP Family Real Estate. Rob Lapidus, Chief Investment Officer, Co-founder, President, I think, at L&L Holdings.
Can I free this?
Bruce Mosler, Chairman, Global Brokerage, Cushman and Wakefield. And next to him, Steve Siegel, Chairman, Global Brokerage at CBRE. So as I was saying to you before we began, there was a quote in a couple of newspapers saying that this is the end of the office market as we know it. Is that true? What's your thoughts about that comment?
Well, can you hear me? My thoughts about that comment is I've heard it in my career probably a half a dozen times, and it may be a new market for some period of time, but this country and the world as a whole has a resiliency, and I guess it depends on what happens with this COVID-19 going forward. Does it become other iterations, and are we going to deal with this for an extended period of time beyond now? But as the office space is concerned, there'll be social distancing, there'll be a lot of changes, maybe even resulting in more space needed. People are going to work from home until they find out there's not the kind of productivity that they get now, because we have to work from home. And I think it'll return to some level of normal operating. Maybe we won't be hugging and kissing and shaking hands all the time for a while, but even that will return. But when is the only question.
Bruce, you wanted to throw your 2 cents in?
Yeah, look, I think Steve really covered the topic well, but I'd like to give your viewers a little perspective. Post 9/11, people said that they would not go back downtown. They said that people wouldn't occupy high-rise towers. People said that they wouldn't do tower floors. We have the benefit of 2020 hindsight. We know that the most valuable real estate, some of the most valuable real estate in all the world is downtown, and everybody's gone back to occupying high-rise towers. We should look at this in near-term, mid-term, and long-term phases so that we get it right. And that's, by the way, what the Cushman Wakefield playbook does. In the near term, we're going to have a new normal, and the new normal is going to have social distancing. And whether it's the 6-foot office that becomes the norm, where we will see additional office space taken, probably offset by the ability to work from home, till we get the vaccine, the new normal is going to have a combination of those things. In the midterm, just as post 9/11, we had some takeaways. What were some of those takeaways? We hardened assets, we saw resiliency, we saw redundancy, we saw some dispersion. Even as we speak, there are major commitments being made by technological companies to grow. And I'm not talking about 100,000 feet, I'm talking millions of feet amid the COVID, if you will, tragedy. The bottom line is it's impossible in this moment to say, how does it all fall out? What's the percentages? But one can assume, as Steve said, and I want to reiterate, New York is resilient. The talent pool is in New York. The ability to grow a company with the required talent means you've got to be in a city like New York. I think net, with new distancing, what I think will be the new norm, even in the long run, with distancing being a component part of this and de-densification being part of that, at least some of the new normal, I think we'll see net a little bit more office space taken over the long run. That's just one man's view.
Okay, but I think
I already have tenants reaching out or in the market with us now who are stepping back and looking at their space plan, the former open plan with one desk on top of another, actually people going into desks that aren't theirs until the next day. And they are redesigning their space to change it to allow for the social distancing, and is resulting in more space, not less.
Okay. Unfortunately, you're talking about larger tenants. Eric, who happens to have, what, 290 tenants in your portfolio?
2,800.
2,800 tenants.
Close, Michael.
Okay, many of these people can't afford to do social distancing. They're small tenants. How does a small tenant running a small business, operating over here, operating in the social distancing. How are you gonna take the person who has 1,500 square feet and say to him, you're now gonna have to work with 500 square feet per person? Eric?
Well, I think the first thing you want to point out is if you look at today's circumstances versus today's human nature, it's more likely the circumstances will change faster than human nature will change. So if you think human nature is about being together and being in offices, I think that'll outlive today's circumstances. I think that's sort of what you said. I think that's right. As far as what we're going to do for the tenants, I think the lowest common denominator in New York is going to be the transportation system. So if people are willing to get on a subway and willing to get on a bus and willing to get on a train, I sort of find it hard to believe that they wouldn't be willing to get into an elevator with 3 other people. So we're going to come up with, ideas around how we're going to keep the place clean, ideas of how we're going to, freshen up the air, and ideas about how people want to come to work at which time. And I think we can figure it out. I was just on a call with my whole team, and we already have plans for all the buildings in terms of how people come in, how people come out, how people interact with the staff. So I think the reality is, I think it's going to make a lot of sense. I think people have to be really responsible about how they're feeling and what the current status of their health is before they decide to enter the workplace and enter the public. And I think
Both Bill and Rob are in the middle of doing major renovations or construction of new buildings. Rob, you're doing 425 Park Avenue, which is considered by the Harvard Business Review this week as the healthier building. How are you changing the configuration? And Bill, a similar question on 550 Madison. How are you changing your configuration to take care of the new social distancing, work ethic, and so on?
Well, I want to answer first your question before, and the headline that you brought up is a headline to sell papers and get people to react to news. I think one of the things I've learned a lot about being from home the last couple of months is not to watch the news. It's the same, crazy headlines all the time. So I watch like 15 minutes of CNBC in the morning. I see what the market is at the end of the day, and I try not to think about it. So that was an hysterical headline. Will things change? Of course. We evolve. From each crisis, we learn something. There were some permanent implications from 9/11, some permanent implications from the financial crisis. There'll be some permanent implications here. But Eric's 100% right. Human beings are collaborative social animals. We work much better together in a common office than we do. Listen, Zoom and all this WebEx stuff is great as a supplement. When I see Steve Siegel, I'm going to hug him. All right? I'll take the risk.
Me too.
Me too.
We all
So
will.
put in context. Now, you asked about changes we're making. 425 will be done in 4 months. We're making no changes, right, realistically. But that building, we had the opportunity to think very, very forward thinking in terms of air filtration, amenities, touchless security, all the types of things that the new tenants are going to want to have in their building. Not everyone can afford to be in that address. I think one of the challenges for Bill and Eric and all of us in this industry are going to be, okay, with the 450 million square feet in New York, and let's just say 350 million of it is old, whatever that means, right? The 1980s vintage, 50s, turn of the century. What can we do to those buildings to have them make some of these accommodations? And we've all seen this, the sort of bifurcation of commodity real estate versus specialty real estate, new real estate, things with amenities, re-energized buildings. Everything we're learning from this crisis is now going to be part of what that differentiation is. And so I know we'll be thinking about, we haven't finished, we haven't started building terminal. I know we'll be thinking about what will be changing about the plans to make it better for the 21st century tenants, including some of the things we're learning from this crisis. So short term, listen, the next 18 months, it's a crapshoot. When's there therapeutics? When's there a vaccine? You'll come to work more quickly in the Sun Belt than you will in New York City. And I think it's going to be a very slow, gradual process back to office buildings in the city. But we have to be empathetic. We have to be realistic. And if most of our employees take a subway or bus or a Metro North or whatever, we have to be empathetic. They might not be comfortable traveling that way for a while. So more people, we're going to have to be much more flexible about working from home and staggered work schedules for a period of time. Once the vaccine is there, there might not be a V recovery in the economy. there's going to be a V recovery in socialization. I miss my friends. I miss my colleagues. I miss my employees. I'm a social person. Everyone on this phone is. So I think that next phase for us, we're going to be dying to go to Yankee games and concerts and Broadway shows. But for the next 6, 12, 18 months, whatever period is going to be a little bit of less of everything and a very gradual reintroduction into normalcy.
Just adding on to Rob, if I might, I'm beginning to miss people I don't even like. So that's really a problem.
That's why we put this together, because
I love it.
we really don't like on this.
That's
Can I-
good.
Only you, Siegel, would have come up with that comment.
You can say it because everyone likes him.
Can I
Can I-
say one thing?
Can I just say a couple of things?
A couple of thoughts. So,
I
Steve, no,
okay.
everybody loves
I
you.
just want to say something medically, that's
There's,
all.
there's
Medically
nobody
related.
that doesn't love Steve. So a couple of thoughts. So, when you look at what's going on in the United States and around the world, it affected everybody, right? And some, much more devastating than others, but it's a pretty tragic event, especially for small businesses. However, it lets everybody kind of reset the deck as far as their businesses, how they use technology, how they use real estate, their teams, what's important about collaboration. And I think people learned a lot of lessons about, how to make an effective workplace even better. So, I think the things that people are going through right now, especially on, the larger tenant side, is this, the push for density went too far, right? We've been hearing that for a long time. Now this gives everybody the opportunity to de-densify. That's going to happen right away. And so, out of our, call it, 19, 20 million feet of office in New York City, we have conversations every day with our largest, kind of customers, tenants, and that's a universal theme. And so they're trying to sort through, does that mean satellite offices in other parts of the country, other parts of New York City? Working from home, though, doesn't seem like that's like a great long-term option, because, I think if we've all said the collaboration and the, human interaction is really important. People are reevaluating the plans that they've got for, buildings that they're going to be moving into within a year or two, taking the time to kind of redesign those. Technology is going to be a big part of the reentry into real estate, right? So again, I think this gave everybody the opportunity to sit back, what works, what doesn't. I mean, we found in our own organization, the things that we've been doing for years, as far as our, data storage and, communicating, pushing things around, was ineffective. There's certain tools that we've been using that, up until everybody working from home, we've now identified ineffective. So that'll give us the opportunity to kind of redo our platform so we can run more efficiently. And again, I think kind of the IT component, the sensors in offices and, all the things that'll be application based for real estate consumers, touchless, openings for doors and cabinetry. It's not just a COVID issue. It could, there's long lasting, I think, benefits that come out of a lot of this. So, I think it's, while tragic on the one side and the loss of life, there is some positive that'll come out of this. That'll make, I think, companies more efficient, just as far as the, the overall use of real estate. And so talk about New York, there's no question. I mean, the 5 of us here, the 6 of us, we've seen this before. Fortunately, I've been, I've seen a bunch of cycles. Steve and Bruce, you've seen a couple more, but, I think the headline,
Not necessary.
well, okay, sorry.
They were there for the
Sorry.
pandemic in 1918.
Yeah.
I want to talk about 1918.
But
in a second.
but no, and so Rob said it. It's that headline, right? The news is always looking for something to grab the attention, and so we always come back. It just comes back differently.
Let me get off this topic and get to some other meat and potatoes topics.
Sure.
Okay, we know that the Fortune 500 large companies paid their rent in April. Okay, with Eric's 2,900 tenants in his property and your other properties, what amount of tenants paid their, do you project for tenants paying their rent in the month of May? Any discussion, Eric?
So we received about 92% in March. So far, we're about 60% in April, but we told the tenants who needed help to go apply for the PPP loans and not to pay us April rent until they got the loans. We're looking at it when we think the loans are going to be distributed, which we think will be relatively soon. The next 2 weeks after that is going to give us a good indication of what people are going to do with that money. So we sort of assume around the middle of May, I'll have a good idea. But I don't think May will be worse than my April.
Bill and Rob?
So for April, we're about 93% right now. I just think because of some timing, we'll probably be at like 95-ish. I mean, we're at the end of April, but some tenants traditionally pay late. Eric brought up an interesting point. The whole application for the relief packages really complicated. The banks have been largely accepting only their customers. We've actually set up some guidelines and help. We've hosted a couple of webinars. We've got a volunteer program on our website so that you can call us. We'll help you fill the paperwork out with some experts that can get through a lot of the the difficulty and some of the application pieces. So it's not as easy as everybody thinks to get this money. So we saw the first one run out of money
You're
after
bringing
a
out
few
the
days.
interesting thing. Even though Eric expects many of these tenants to get the money, many of them will not get it. Okay, there's a change over there. You have to have the bank relationship. You have to have structure. It's not that easy. Rob, what do you see in your properties?
So our properties and our tenant profiles probably more similar to Bill's and Eric's. We had a little over 90% rent collections in April. I think retail was about 63, 65%. I think it will get a little worse in May. It just feels that way. I mean, JP Morgan and Bank of America and Tiffany will pay their rent. Not sure about the law firms and others who may use this as an opportunity to try to renegotiate.
So
It's
here's
very
the question.
interesting. I spent time on the phone today with someone from asset management and one of my in-house attorneys talking about default notices. And I said, I want our default notices to be reflective of our culture and to show empathy, right? If you're a great tenant, no boo, and you're a world-class organization and you have no customers and no revenue for a period of time, you can't just sit there and say, pay me the rent, too bad. So even though the first initial wave of default notices went out in our normal course, now everything's being tailored more specifically with a view towards our culture and the way we want to treat our tenants. And we have to be empathetic. And so I think that is the biggest notion here that we all have to remind ourselves. The world's not coming to an end. We've all lived through many cycles where, oh my God, everyone's hair's on fire and it's all bad. I do know if we're sitting here 18 months or 2 years from now, we're going to all be back in our normal rhythm mode. How you treat people in a crisis, I think, is really important, reflective of sort of who you are. And we were talking about it earlier before we were on the program about people in need today. Have to think about those who are less fortunate than us. Everyone on this call, fortunately, has no worries about roofs over their head and eating. But I'm involved with a lot of nonprofits. I mean, oh my God, the amount of food pantries that have closed down, increase of homelessness. Yeah. Every single firm, every single charity is really hurting right now. So I like that because it gives me some perspective that yes, I might have lost some money over the last 2 months. Okay, big deal. We'll have time to earn it back. And so anyway, I think we as New Yorkers, and we're tough and we're resilient, and we'll come back. And everyone on this call is really a problem solver and a leader. I think that's what we need to do in times like this.
Okay, so here's a question. If somebody comes to you, a small law firm or a medium-sized tenant, and says to you, I really need this deferral, okay, and Bruce and Steve, you representing clients in the same way. What do you say to them? Are you asking for the financial statement, as Empire State Realty said the other day in their conference call, that we'll give a deferral, but we want to see the financial information? What are you doing with regard to deferral? How long and how are you deferring the payment? Are you adding it on to later on to the lease? Are you adding terms? Are you using security deposits? What are you doing with regard to deferrals?
Yes. So Eric's ownership, if his family has all the equity in the deal, it's an easier conversation than Bill's ownership, my ownership. We have institutional partners. We all have lenders. So I can't say to my tenant, no problem, do this. We need to talk to our institutional partners. We need to talk to our lenders. There's a process to go through. My view is very simple. If you're trying to game the system, I really have no pity for you. Pay your rent and shut up. If you've been a good, upstanding tenant, you're falling on hard times based upon things completely outside of control, we're 100% going to work with you. What does that mean? It depends. If you ask for 3 months of rent abatement or deferral, put it in and adding it, up to the next 12 months or something, it's easy. If you're a restaurant and you might be closed for 12 months, it's a different story. Or I think we all have to make the assessment. Eric probably has to do it more than Bill and I do. Is this tenant going to survive? Some tenants in your portfolio, you might make the assessment, you're not going to survive. You have to say to them, I'm taking a security deposit, see you later. So it's a combination of all that. We have done mostly, up till now, the tenants have needed it, some form of deferral. People have usually asked, it's been months, it's been a few months, and then it's been added on some way, somehow to the rent. That's the general answer. But I think it's building by building and tenant by tenant because there's such different issues.
I think it's critical, build tenant by tenant. It's not so much building by building, in my opinion. It's tenant by tenant. And what Rob said, to me, is a big concern. If a tenant, in some instances, does not get a deferral, who's warranted, justified, needs it, let's put it that way. If it's warranted or not is in the eyes of the beholder, but it's needed. That tenant doesn't get it. That tenant is going to go. I don't think it's something to be so, I don't know if the word's cavalier about. If enough of them go, it could be a ripple effect. I'm watching that type of thing happen in the restaurant business. You mentioned restaurants. I was going to ask you, Rob, about your restaurant. I have a restaurant, as you know, down in the village, or some of you know, and we're going through a fierce battle to get relief. If we don't get relief, what happens? You get my restaurant. There's an empty retail space. That city needs that like a hole in the head. And there are thousands of restaurants in that same position. And I feel the landlords have an issue too. They have mortgages to pay. They have people they employ. And if they stop getting rent streams, the answer is no answer. I don't know how we deal with it. I know I'm negotiating my deal. That's separate. But I look at all these restaurants. I think several thousand will not open again. So what happens to that space?
By the way, I hope, Steve, that's not right, but unfortunately, I fear that you may be right. But Michael, if we could, I think there's a part of the dialogue here that Rob touched on earlier and Bill touched on and Steve as well as Eric, that I think we need to come back to, because we really need to look at this as a unique, there's nothing that is as tragic as 9/11 was, as difficult as the 08-09 Great Recession was. This is yet a new experience and a different experience for this city. And we really do have to look at this as a near term, midterm, long term, what's going to happen. And some of the things that we began to touch upon, I think, are really important points. We talked about technology. And in fact, we're going to see the use of technology accelerated at a rate of change now that we never thought possible. Yeah. Faceless recognition, voice technology for elevators, everything like this to reduce the person-to-person contact, to eliminate, I think, the risk of spread of this or future viruses is now going to be a component part of what we think about as best practice for every building, and including filtration systems. And Rob touched on this, but I think it's important to understand new buildings and old buildings, there's no difference in terms of, there are slight differences. Let me say, for those who've redeveloped and have all new systems, that's an outstanding advantage. But let me be very clear, old buildings that upgrade to the MERV 13, I think that's the newest, perhaps most sought after filtration system right now. That's just a filter change. Those things can be done, and old buildings are just as viable, just as acceptable, going to be able to meet best practices in a meaningful way. So we shouldn't, I think, create stock, classification in this city. Owners are going to upgrade the systems. Air filtration is going to be at the top of the list. They're going to do those things. They're going to deal with all the things you have to do to create less traffic in your lobby, how the protocols for cleaning change. I think those protocols for cleaning change are going to be part of the future. And the question is going to be, ultimately, what's your base year? Who pays for it? Those are discussions we'll have down the road. But this pandemic has accelerated the rate of change and probably will create more permanent change. other than how you office. And I just want to leave your viewers with one comment. You create a culture, you create a brand, you create loyalty by coming together in the office. You problem solve, you have breakthroughs, you create strategy by coming together in the office. So yes, home officing will be a part of the future. There's no question. Hot desking, benching, de-densification, those are things that are going, or the densification process, that's probably at an end. But there will be new norms that I think we take away from this for the
With regard to the new norms, I think I want to address, because we have 30 minutes left, I want to bring up.
I have a dog scratching on my door. Very important.
Okay, that
Can I
people.
just ask a question of Bruce?
Okay, so let's go to the
You made
point.
a lot of broad statements about the things that buildings need. Do you honestly believe that every single older building, if you will, can afford to do what you're suggesting they need to do and compete from a rent perspective with the newer product? I, for one, don't think so. I've looked at older buildings for clients. Look at 4 Times Square, 1999 building, spending close to $200 million to do what you're talking about. Got an empty pallet or clean pallet, and they could do that and then go out and get the rents that were required to do that. You think a building with 80% occupancy, 90% occupancy can do those kinds of things?
Steve,
My answer is no.
hold on. I'm going to parse your question, because I think you've asked the question in a little bit of an unfair fashion in the following way. Do I think an old building can meet all the standards of a brand new building with brand new systems? No, but that's not what I'm saying. What I'm saying is an old building can create and meet best practice standards through air filtration by doing certain things. Are they going to have all the same technologies, all the same new systems? No, but I don't think you can. I really do believe that older buildings can meet acceptable best class standards by doing certain amounts of work.
Maybe for air filtration,
I'm gonna have to cut this.
broad list. I
Okay,
like
there
to
you go.
talk about, who's I like to argue about stuff.
let's
Yeah,
go.
by the way, I agree more with Steve than Bruce on this one. Sorry, Bruce. Talk
Yeah,
about another.
And that's okay. And
Here-
that's
here's
Thank you,
okay.
Rob. Thank you, Rob.
Okay, here's the question. With regard to the tenancy and the retail and the properties that you have, isn't it easier to keep that retail tenant at a lower rent as opposed to going out and getting a new tenant, changing the configuration, leasing it up, paying the brokerage fee? Isn't it smarter to do that?
Yeah, of course.
You
Look,
sound like a broker.
and so, no, it's a valid point.
It
And so,
sounds like
look,
an owner, because the broker would have wanted
I
you
want
to.
to know who
the
you're representing.
retailers are, are really
Okay, so
disproportionately affected.
let's get to the next topic. Everybody's talking about co-working. Co-working spaces will continue, right? What's your thought about co-working in general, especially in today's market where people want to maybe have smaller offices in certain cases where they have the enterprise system? Rob,
Again,
Bill?
thinking about, again, making a decision in the eye of the hurricane, we have to think about, why did co-working come about? There was a lot of really good reasons for it to exist. The reasons for it to exist largely will still exist post this pandemic. Maybe reconfigured differently, maybe more enterprise model, maybe more partnerships with landlords. But at the end of the day, it's very expensive for people, particularly smaller tenants, to invest a lot of capital into their space. So the co-working concept, is there, and I think will continue to be here. You have to separate that from the capitalization of some of these businesses. Was WeWork ever worth $47 billion? Come on, maybe Adam Newman thought that, but no one else did. So that's a valuation and a capital thing, not a use thing. So listen, we have co-working tenants in our buildings. They all paid rent last month. We'll see what happens next month. But I do think that business model will have to change and evolve based on what our needs are today. But I definitely think it's going to be part of the future in a different way.
I'd say that co-working, I think, is got a bit of a problem. I think, flex office enterprise, there's definitely a place for that. I think the co-working has got going to face some challenges. And when you look at the business model, it's very difficult to create a model where, distancing in a co-working, the economics go upside down, right? So I think that's going to create.
They almost can't pay the rent now with the density they have.
And they didn't. And so
I think what you're talking about, maybe returning more to the HQ or Regis models, which have more social distancing
It
and
could
have
be,
private
but
offices and
look,
so
and
on.
we saw before the pandemic, we saw an incredible surge of activity of smaller space users between kind of 3,000 and 7,000 feet in our portfolio, to the point that we were starting to build more of it. And so I think, we'll see if that demand returns, but it will come back at some point. But I think we're going to see a lot of demand from kind of the co-work and flex office users that have some, concerns about going back into some of those environments.
Eric, you have, I think, WeWork and one property in Notel. What do you think about Notel and WeWork in the future?
We don't have any WeWork. We work in a third-party building. We have 2 buildings that have Notel. I think one thing for them is if they would stop focusing on just sheer size to create this big IPO, they would actually run their business a lot better. I think they were so focused on size and so focused on just growth that they sort of took their eye off the ball, which I think was a mistake. I don't know. I sort of think they offered a flexibility that I think the rest of us now are willing to offer in a lot of ways. I think what they offered, and the way we understood it, is we wanted traditional sort of long-term leases, which is what our lenders wanted, and the tenants didn't want that, and they found this gap in what we were willing to offer and what they could find. I think now a lot of us are willing to offer some of those things, so I think they're going to struggle a little bit as they compete, for what we're willing to accept for rent and what the hotels in the world are willing to accept for rent. So they're going to have to up their game in terms of the things that they offer.
I think that, but Eric, I think they will, and I think I think you're making a very good point. But I'm going to come back to what Rob said. I think the premise here, the business model that they really espoused, was something that was missing in terms of flexibility for the office occupiers. And when it was rolled out, it was really richly embraced. And at the end of the day, that kind of term flexibility, balance sheet, if you will, reduction ability was critical. And to your point, Eric, maybe some landlords are willing to do that more so today, but they're not willing to do it on the scale that I think that corporates want. And to Bill's point about the co-working versus flex, that's going to it will sort itself out. I do think co-working will exist, but I think it's going to have to adjust. And by the way, these are awfully smart people running these businesses right now, very creative. They're beginning already to think about how social distancing impacts the co-working component, but they were all gravitating to a larger model, I think, that really embraced flex space, which is still out there. And I think there's enough demand for that, provided that they sort of sort out the desire to grow, to Eric's point, with where the demand really is. And that's going to happen. Now, this cycle will push that to happen.
It's more the enterprise model and not 150 people at 150 decks and a coffee bar with 50 people gathered around it. It's more flexibility for the corporates. That will exist.
And by the way, this pandemic, I'm not so sure the old co-working, tons of people with other amenities won't come back too. I don't know, but certainly in the near term, it's going to be more enterprise model.
You mean the HQ Regis model, as opposed to what we had over there before?
Well,
just
the
large
enterprise
use
model.
of space, taking big chunks of swing space for their corporate needs, as opposed to a small startup in this, bigger environment.
Yeah, there are corporations that took 5-year deals funded by the co-working enterprise divisions. And that flexibility, Rob says and Bruce says, that still will be needed, and maybe more so going forward.
Yep, absolutely. That could be the reliever for the satellite office, right? I mean, that's where that might play into the.
That's beginning to be thought about. Yeah.
Okay, with regard to the satellite office, Bill, your colleague Scott Reckler said there'd be more people going to the suburbs for different operations, like in Brooklyn, Westchester, New Jersey. I mean, Steve used to work in New Jersey. Do you think that the companies will be operating part of their businesses in the suburban areas?
We do. We're seeing it right now. As I say, with companies are starting to sort through kind of the real estate solution for the de-densification. What's going to happen, pretty quickly. And so, having people that have easier commutes closer to home, not the home office necessarily, but their own establishment somewhere in a suburb or a borough, lower cost, that kind of evens out the total real estate cost. It's definitely happening now. We'll see if the trend continues and grows, but we're definitely seeing
Yeah, we do have a number of tenants.
It's important to say that this is not a trend that we can determine whether this is a long-term one or short-term. To Bill's point, we are absolutely seeing a near-term for the next 12 to 18 months, largely driven by employers' care for their folks' welfare and safety, not to have them get back on mass transportation immediately. We're seeing a near-term desire for some dispersion to, if you will, the suburbs. That's not clear that it's going to be long-term at all at this point. Maybe there'll be a satellite component of it, but most of what I'm hearing is really it's a near-term need to take care of the health and safety and welfare of their employees.
It was a similar approach at 9/11, and eventually everyone consolidated back under
That's
one
right.
roof. But yes, there are tenants inquiring about redundancy locations, less density, not having to take mass transportation. But the one thing that's happened in this country for the last 20 years is urbanization. People want to live, work, and play in
100%.
cities. They don't want to be out on the lawn and walking around having their lunch at a picnic table.
So here's
There's
a
a
question.
reason why millions of square feet is being committed to still now
Right.
in the midst of the pandemic by the technological players, because the city is where they can get the workforce that they require to drive their business forward.
Exactly.
Right. And that trend, as Steve said, is a 20-year plus trend. And again, this horrible near-term situation, I don't think changes what makes everything great about a city. And so I don't think it's going to have a major impact long-term on people fleeing to the suburbs for all the reasons that I've articulated here before. But short-term, I think certainly, and for some businesses that want to have satellite operations, the lower cost of doing business out there. So it depends on your employees, right? If I have 50 employees who live in one suburban area, and they're back office people, you can make a really strong argument why you want to have satellite office there. But everything's great about the city, the connectivity, the vibrancy, all the reasons that bring you here. I don't think that changes just because of this.
Yeah, Bill said that Bruce and I lived through more cycles than him. But we've had the cycles where people fled the city for a variety of reasons in the 70s. They fled them post 9/11, and they've all come back and they've flourished. That maybe the face of the industry changed from the industrial to the service and so on. Technology now, as Bruce said, this is where the people who the employer wants to recruit and have work for them are, whether it's here, whether it's Atlanta, Chicago, Los Angeles, San Francisco. Those cities will all recover and be occupied again.
So here's a question with regard to commuter vans and so on. Since many people don't want to take the subway and they may be in Long Island City or other areas, do you see more companies? And I know, Bill, when RXR bought Starrett Lehigh, they had the vans over there. Do you see more companies coming with vans and other alternative means of transportation to get their employees?
I don't know. I think that falls in the category of too early to tell. From what we're hearing, the anxiety for, a return to the workplace focuses more on the transportation element to get into the city. So Metro North and Long Island Railroad. And, I think that those vans may fall into the same category. I don't know how comfortable people will be doing that. And again, they may just avoid the subway altogether. But I don't think that's practical to think that people are going to be driving either, just given what, traffic looks like under that scenario. So I don't know. We're looking at it. But you raise a good point as far as Starrett, because we got to figure out, that shuttle will come back at some point. I just don't know when the right time is.
And I think the broader issue, Michael, is how are the protocols going to work? We are hearing things like staggered work starts. We're hearing things like protocols about how to get on and off of the subways. We're hearing things about which way to face, and again, increased cleaning protocols. I think those things have to go to work. We have to see how they work, and people have to get comfortable. It's going to be a challenge, but time will tell. And I think most of this is going to take a little bit of more distance to unfold. But we can't get away from the fact that we have to have mass transportation. So it is about the protocols. It is about staggered starts. It is about increased cleaning to make the public feel as at ease as they can under very difficult circumstances.
You know, when you talk about increased cleaning, somebody's going to have to bear the expense. Is it the tenant's responsibility? Is it going to be borne by the tenant and the landlord?
Bill, do
So,
we have a
you
deal
know,
currently we're negotiating? Because then the answer could change.
Yeah,
So,
exactly. Bruce is
look, we've
representing
had-
landlords just one way.
we've had conversations with a lot of tenants, you know, mostly in the larger category. And so, you know, the attitude seems to be, hey, progressive landlord, you've got the right approach here. You know, we've got a whole, you know, variety of things that are, you know, we're doing that is probably certainly not overkill, but there's going to be some, you know, visible cues that will make people feel better, like daytime cleaning as opposed to the nighttime cleaning, and some, you know, some temperature controls in lobbies and whatever. We're going through a whole bunch of stuff, but you know, from what I can gather so far, the tenants are embracing the protocols we're putting into place and are certainly willing to bear the cost of the you know, the items and the services to, you know, make their employees and themselves feel safe.
I think, listen, we're all gonna spend more money, right? The landlords will spend more money on common areas and all that. Tenants are gonna have different requirements. I'm sure in the new leases that, you know, Bruce and Steve will be negotiating, there might be a different base case cleaning that's, you know, more frequent and all that kind of stuff. But just like all the pain that's happening right now in the market, it has to get shared, right? The tenant can't pay the rent, hurts the landlord, hurts the lender, hurts the taxing, you know, body. I mean, think about, I mean, I'm very afraid of the tax situation in New York. You can't add trillions and trillions of dollars to a deficit. I'm afraid that the knee-jerk political reaction could be to just start taxing everyone, and that's already been a problem here in New York. And that's one of the things that just concerns me. But if you're making a decision as a business leader, you know, and you're sitting there saying, gee, I'll pay X percentage more to be in New York City, but when that percentage becomes so untenable, you know, what do you do about it? And I'm not sure what the answer is, but, you know, we haven't had great political leadership sort of dealing with that recently. So that's just a longer-term concern that gets exacerbated by this situation.
This panel is not on political discussions, okay? So here's a question for the
Not
owners.
on dogs either, but I got one on my lap.
Okay. Here's a question with regard
I
to
want,
the owners.
Rob, I want that dog.
I have 3 of them.
A dog could be a better mayor. Oh, sorry, not political.
Okay. Here's the
I
question.
agree.
You know, we're saying everybody has to chip in. Have you gone to your banks? Okay, this is the owner's question. Gone to your banks and said, look, I need a deferral of payment of principal and interest. And how have they been reacting on that?
So we haven't had to, and you know, hopefully we don't have to. So, you know, we've got pretty good visibility. And again, you step back, and this is why, you know, it's for a variety of reasons. But you know, we try to focus on, you know, creditworthy tenants, and you know, every now we mix it up a little bit. You know, you got to get some creatives and certainly some retail that may not be as strong. But just given the profile of most of our assets, we're in a fortunate position that you know, I think we're going to make it through here. So, you know, we have not at this point.
Eric?
So what we did is in the buildings where we had a lot of WeWork exposure as a percentage of the overall income on the property, we went to those lenders up front and we said to them, hey, we don't know what's going to happen here, but we're letting you know that if something happens with their payment of rent, we're going to have to talk to you. So we just wanted to be in front of it. Fortunately, you know, so far we're good and WeWork's paying, it wasn't an issue, but that's how we approached it. We're fairly low leverage in our portfolio, and it really has a lot to do with our partners. A lot of our sort of institutional partners, pension funds and the like, don't like paying like mortgage recording taxes in New York, and we probably own, you know, 3 million feet with no debt on it at all. So if you average it out, our leverage across our portfolio is more like a REIT than it is sort of an entrepreneurial owner. We'll take acquisition financing of 65% or so, or maybe 70 tops. But by the time the building's stabilized and we recapitalize it with that type of partner, we end up having a lot lower leverage. So we haven't
So I
had,
just want to point something out. Rob said he talked to the lender. So this is where, when you go through a couple of cycles and you go through a tough time or what, a lot of people have made the decision to stay away from CMBS financing because there's nobody to call. There's nobody, and we've all been to that game. And so when you go through the, kind of country and you talk to people who've got a lot of apartment or, hotel exposure, they've been around a long time. And so they'll say, look, we stayed away from CMBS. We've got relationship lenders, right? Relationship lenders. And I think it's important to think about that as you go through this, because there is somebody to call and you can have a rational conversation as opposed to
we
nobody
agree.
home.
We have 0 CMBS loans in our portfolio. 0.
Here's a question, I got to ask Eric. I know, Eric, you said to me every Monday you and a group of 9 landlords speak and discuss the world. What do you see with these other landlords who are smaller landlords who have the smaller tenants today? What's happening to them with regard to the rent collection, with regard to discussions with banks, and so on?
Yeah, so we sort of talk about the idea that we don't want to put any of the tenants out of business, but they can't collectively put us out of business. So it becomes difficult when the tenant attitude is, hey, we're all in this together, but you pay for it. And we're all sort of experiencing a lot of that stuff. So some of the guys are collecting the rent at a sort of a lower rate than we are. There's certain industries that are definitely struggling. Fashion is one of them that's definitely struggling. So some of the garment guys are having a hard time. As far as the lenders go, we're in contact with all the lenders. Joe, just in case, because I don't know what the collections are always going to look like. I just want to be ready and be ahead of the curve in case I need some help from those guys. We won't really need any help for the most part. Maybe 1 or 2 buildings. We have 1 CMBS loan, which should be okay. But I think there's a lot of tenants out there that are struggling. But I think we should realize, look, we're all going to come out of this dented, but we shouldn't come out of this where we left somebody behind. That's wrong.
So here's a question with regard to something that I know that both Steve and Bill and Bruce have been involved with, and Rob has done it. He should have done it before at 425. It's the Midtown South rezoning. There are going to be hotels closing in Midtown South. There are other properties that are going to be changing over there. Do you see new construction being taken care of as a change from this effect? The fact that hotels or other businesses won't be there, so we can see new towers going up like what you're doing at the Grand Hyatt, Phil, okay? And what Boston Properties is supposed to be doing on Madison Avenue. You see that as an opportunity for the future?
Look, it's possible, right? I mean, we entered into that arrangement long before the pandemic, but I suppose there could be more opportunities now. The hotel business is in a real crisis right now, so I think it's going to take a long time to kind of sort through that. So you might be right, Michael. There could be. I think there's going to be a lot of opportunities, going forward. Not necessarily vulture, but maybe capital infusions or mezzanine debt financing or joint venture equity. Who knows? But it's probable.
Yeah, there'll be redevelopment, but demand will determine when and how. We are about to get an air rights deal closed for a landlord on Park Avenue, and they've not slowed their desire to have it and their belief that they're going to redo this building in question. So there will be redevelopment, as you guys say, of hotels, vacant sites, whatever's left. But again, it's going to be what happens in New York as a whole. Do people come back the way we all believe? And will there be demand for more space?
Okay.
And I think on the hotel question, the bigger hotel companies who are better capitalized probably have a better shot of withstanding this real terrible downturn. Those aren't the sites that are going to become available. And a lot of the smaller hotels that maybe would become available aren't really great sites for office development. So I'm not sure there's going to be this flurry of activity coming from that. But the seats at the table will change. Some of the retail is going to go out. Some of the hotels are going to go out. Some sites might be able to be put together, to take advantage of Midtown East rezoning. But I'm not sure it's going to be a floodgates of that.
One of the highest revenue for the Empire State Building and plan for One Vanderbilt, as well as the Hudson Yards property, was the observation decks. I mean, what's your thoughts about the future of observation decks, rooftop properties, which I know, Eric, I think you and your family own one property. What do you see that with the change today?
And near term, long term.
Yeah, I think the near term, not great. Long term, I think it'll be just fine. It'll return to the numbers that all those venues had prior, maybe more. But near term, it's very difficult.
Yeah, near term is the same answers to everything. They're too dense.
Yeah.
Eventually, when that density becomes ease, those places are still going to be tourist attractions.
Yeah.
They're going to be,
Absolutely.
I've been to all of them. They're phenomenal. And people are going to want to go again.
Okay,
We're talking, Michael, about the consumer here, right? At the end of the day, hotels will come back, thrive again when the consumer is ready to consume, when the tourist is ready to travel, when things get back to a point in time where I suspect we have, and again, I think the most critical point in time is the vaccine. When we have that vaccine, we'll understand better what the long-term normal looks like. And I'm pretty optimistic. But at the end of the day, back to your question about, East Side rezoning, I think that hotels that are part of this, that are in development in that cycle, that are in the out years, I think they're going to be fine. I think that what's suffering right now is in the here and now. To parse the question is hotels and restaurants and small business, which has been hit inordinately hard, right? Which is different than other down cycles we've seen. They're bearing the brunt of this right now. That's going to take time for consumer confidence to return. And it will.
With regard to consumers, we've had a lot of food halls being built throughout the city. There's going to be a change over there. How do you see that? And Rob, you have Italy in your property. What do you see changing with regard to social distancing and so on?
So I think all of these questions, we sound a bit repetitive here, but, what's going to happen near term and long term? So some of I would say, going back to observation decks, there were discussions of more of them being built. Probably not having any more of them is a good thing. There was maybe too much supply of that coming. Maybe the food hall was the same thing, and the good food hall operators like Italy will do really well, but maybe some of the other ones shouldn't exist for other reasons, right? I think this pandemic is basically going to be an accelerant. So retailers that were suffering before this happened, they're toast. Businesses that were in decline, they're going to go away more quickly, right? So that's what's going to happen here. So all the things that we think about, like in our city, to sort of what's next and what's exciting and how we do it, there's going to be an accelerant effect here, that there's going to be a whole band of new opportunities that come out of this, right? Think about the great financial crisis. Think of some of the companies that came out of that. The Ubers, the Airbnbs, the Lyft. So the brain power that we have as human beings, particularly in New York City, which is the center of so much of this, will accelerate a lot of these things. So anyway, so to answer that question, I think some of the food halls will go away, but I think food halls will be there because people are social and people like the idea of getting different types of cuisine, but they have to be safe. So you got to follow the science. You got to be safe. And we've talked about a vaccine here all over the place. We need therapeutics. We need a vaccine. And we need a vaccine to be distributed to people, not just have it, and not just have it to people in this country. If you want to travel to Europe, I think you want to make sure the vaccine's there too. And if people are coming in through JFK, you want to make sure they have it also. So it's a longer term process to get the world sort of inoculated to this. But when that happens, we'll be quote unquote back to whatever that new normal is.
Can I ask a question? Who on this panel gets the flu shot every year?
I do.
I do. So, that somewhere between 30,000 and 50,000 people die every year from the flu in the United States, not worldwide. And that's the new normal. I don't know how many 100 years ago, 50 million people died over a 2-year period from the great influenza. The same protocols that were released by Amherst College in 1918, how to protect yourself from that flu, is exactly what we're seeing today. Frequent wash your hands, social distancing. It's an amazing thing. I'll send it around to you guys. But the point I'm making is, with the vaccine, as Bruce and Rob have said, we will return to a new normal. People will get their shot every fall. There will be X number of cases, regardless of what vaccine there is. Some people will not will not be susceptible to the right vaccine or to the flu shot that's out there, and they'll get sick anyway. But there'll be less people. It'll be under a controlled basis. For me, it'll be interesting to see the numbers for these states that have opened up already a little bit, Georgia,
Okay,
et cetera, and see Florida's now opening restaurants as of Friday. Was, you know, a low
Okay.
percentage of occupancy and so on. Really anxious to see 2 weeks from now what the cases are.
in conclusion, 19 years ago, Steve Siegel and Bruce Mosler were on one of my first shows from Charlotte's Kosher Restaurant in January of 2002, talking about will we survive and where will we be? We've survived, we've done well, and we will grow. I'd like to thank Bill Elder, Eric Gural, Rob Lapidus, Bruce Mosler, Steve Siegel, the AmTrust title, Steve Napolitano, Senior Executive Vice President, and the Stoller Report for bringing this today, and see you again. Thank you.
Thank
Thanks,
you.
everyone.
Thanks, guys. Nice to see you guys.
all.
Thank you, Michael.
Take care.